All right, let's start with growth. Economists surveyed say that 3% growth is not sustainable. Long-term investors say 3% growth not sustainable. Just look at the bond yield on the 10-year. What do you see that's so different?
Well, I think, there's a lot of factors here, but I'll start with the enormous confidence that you see in the country. That's very important. People are moving, they're working, they're investing. We haven't had that in a long time. Both consumer confidence and small business confidence. Second, I think a lot of folks are underestimating the power of lower marginal tax rates, particularly on large and small business, and the deregulation program, and the energy program that we've gone through, and the president's view that business is good, there's no war against business people, you can keep more of what you earn. In other words, attitudes have changed, and I think that amounts to a lot. We've never really seen this kind of confidence movement before. So I will start with that. There are other things, but that's very important.
So when I throw back at you sugar high, and then why isn't the 10-year yield, 30-year yield higher than it is, what do you say?
I'm not going to forecast interest rates.
No, but the idea that if you believed in long-term growth and it wasn't a sugar high, we should be higher in the long end.
The sugar high argument is, pardon the phrase, but it's kind of a Keynesian demand side argument. In other words, this tax cut is worth thus and such for 1 year. That's not really what these tax cuts, these are lower tax rates. And so they keep on giving. You will keep more of what you earn and invest unless and until they're repealed. And there's no expectation that they're going to be repealed. Now, let me add a very important fact. We haven't had a good old-fashioned business investment, capital goods, CapEx boom. Really, you could probably go back to the year 2000. So it's been a long time, and now we're going to catch up. And we've provided incentives with 100% expensing, for example, and the lower corporate tax rates to do just that. And so you're seeing that now. There's a breakout going on. A lot of people have not really focused on that, and they should. So I think that's going to run and carry, machines and equipment, campuses, technology. You know more about that than I do. Now, along with that, stay with me on this.
Yeah, I'm with you.
These lower taxes and regulations opening up profits. Profits are huge. So we're providing more capital per worker. We haven't had that. And that's the productivity factor. And it's a lot of people in the economics profession believe we'll never have strong productivity again, believe we can't grow faster than 2%. I disagree. Respectfully, I just disagree. And I don't see why these old school thoughts, incentives, taxes, regulations, capital formation won't work. I don't see it. And, the evidence is on my side right now. Now, you can say, well, it's only been a couple years. Okay, fair enough. I'll be fair. But let's look at it over time. But we're seeing the capital X boom. We're seeing the wages rising. We're seeing disposable income, fatter paychecks, blue-collar workers, as I mentioned in the talk. Blue-collar employment is huge, biggest since the middle 80s when I was first here for Reagan. Great story in that well-known supply-side newspaper, the Washington Post, front page above the fold. That's important. And I think there's more of that. And I also will raise this point. I think the face of the Trump economy, besides helping the blue collars, is people own their own small businesses. Now, I'm not saying that's brand new. It's not. But I think it's proliferating. I think it's growing. I think that's what folks want. And so let's just give this a chance. I will put the sugar highs for other people. I think what we're doing here is enhancing the economy's potential to grow. We're raising the animal spirits. The economy is really killing it right now. Let's just let this thing run.
So I did a panel for BNP Paribas last week, and I talked to a CEO of a major tech company, a trucking company, and a utility company. And the number one thing they said that freaked them out was trade and not being able to change their supply chains as quickly as President Trump might want. So where's...
Well, we don't. We've just completed...
But where's China? Because China's the one that they really cared about.
Well, okay. Let's just start with U.S. USMCA, formerly NAFTA. And that's important. The supply chain argument is an important argument. So what we have now is, in my view, an enhanced trade deal, better for all the countries. Supply chains will be better. The rules will be better. The content is better. I just think it's a better deal across the board. That's why we finally got it. So that preserves the supply chains in North America. That's very important. That's our home turf. Okay? Now, regarding China, we have made it clear, the president has made it very clear, China's got to change its ways. All right? Unfair trading practices, high tariff barriers, high non-tariff barriers, that's not acceptable. American firms in the main cannot own their own operations. You have to go through these joint ventures where the Chinese own the majority. That's where the technology is stolen and transferred right there. Right. That puts us at a big disadvantage. They're stealing our family jewels, if you will. We are the greatest technology producer and applicant in the world. That's got to change. That's got to change. So the president has been tough on this. So scale 1 to 10. 10 being USMCA, everyone's talking, everyone's happy. Where are we with China? 0 is there's no communication. Well, no, we're talking. We are talking. So 3 or 2? I won't go there. I'm sorry, with respect. We like to talk if it's substantive. Talking is better than not talking. We like to talk if it's serious. We've made our asks. They know perfectly well. As the president has said, their responses have not been satisfactory, but that doesn't mean they will always be unsatisfactory. And the president has a good relationship with President Xi, and they may meet perhaps at the G20. There's not a deal there. I'm just saying perhaps, and we will see. We will see how it goes. The other thing, just talking to business leaders, is that there's a concern that the Trump administration is looking at China as a short-term situation, that we can handle a trade war, a trade battle for a year, 2 years, but that the Chinese are looking at it in terms of decades, and that in that they can make investments in other countries. They can choose to change their trading partners in a way that we might not. How do you view that conversation? I don't really buy into any of that. I don't know. That's why not? Like a lot of cliches. I mean, look, America is the greatest trading nation in the world. Well, sure, cliches, but remember in the 70s when we had that soybean export on Japan. We wouldn't export any soybeans for like 24 hours, and Japan made all the investment they could in Brazil. Soybeans off the coast of Peru or something? I was a child on Wall Street, but I sort of vaguely remember that. This is not about soybeans, although the Chinese are blocking our soybeans. But that there could be investments made by China into another country instead of the U.S. Look, we want rules changed and maintained. I mean, the World Trade Organization has a set of rules. China should abide by them. Now, the WTO needs reform also. It's various adjudication processes, but China needs to play by the rules. President Trump is protecting the United States' interests, as he must. We are the most powerful economy in the world. Right now, we're the hottest economy in the world. China is slipping badly. The USA is gaining trillions of dollars from all across the globe. It's really amazing to me. So businesses are doing very well. I mean, this worrywart stuff, I appreciate, look, I used to be in your business, and on the other side. That's my job. I have to worry. I understand. That's my husband. But we're doing great. I mean, our businesses are doing great, our profits are doing great, our employment is doing great, our unemployment is falling, our wages are doing great. They got to think about that. So Friday's going to be awesome? Did you just predict an awesome jobs number for me? No, I won't touch that with a 10-foot pole. We'll report it and comment on it when it comes out. But my point is, we're in an economic boom. Frankly, most folks thought it was impossible. Frankly, it's happening. So last question. And it's a great blessing. Prosperity is a good thing. 2019, what's the thing that keeps you up at night? 2019? Yeah. When you're thinking about 2019, what prevents you from sleeping? I'm still working this is October of 2018. Fine. October 2018. What prevents you from sleeping aside from your work schedule and coffee? Have you ever heard of the phrase day at a time? No. But what makes you worried? I don't know what makes me worry. I want to protect the prosperity of the United States and do everything I can. I'm a growth guy, always have been a growth guy. I'm a Reagan supply side guy. I want to make sure that our policies are consistent with growth. President Trump is a growth guy, and he has launched a boom that nobody thought possible. So, and I think, by the way, trade reform is part of that boom and will pan out much better than critics seem to think, as did NAFTA or USMCA. So I will just leave it there. My job in the White House as NEC director is to move towards free markets and make sure that prosperity is sustainable for everybody. For everybody. That's what I do.